And anyway, Monday usually is a day where there are not many opportunity, and usually I don't really trade on Monday because Monday is actually a slow start, just off from weekend. So traders are taking their time, and also I'm waiting for direction as well. So Monday is actually not really a trading day. And in fact, what I never even look at chart today. Yeah. So what I'm going to do this session is you guys let me know what are the currency that you are looking right now, and we analyze together. How about that? Right? But of course, before we start, I will do a real-time analysis on this dollar index. Right? As I mentioned many times, dollar index is very important because especially when we are trading all the major means you are trading against all the currency that trading against the US dollar, right? So it is an important index to pay attention, especially when we want to trade euro dollar and pound dollar. Okay, and of course the rest of currency that dollar CAD, dollar Swiss, Aussie dollar, New Zealand dollar, etc. Okay, so let's take a look at the dollar index. What I see now, basically, I can see that daily time frame, right? We are in an uptrend. Okay, it's bullish, right? We can see the price is making a high, a higher high, a higher high, a higher high, a higher low, a higher low, a higher low. Let's say US dollar want to go higher. Okay, but of course, when we say US dollar want to go high in the long term, but in the short term, we can expect this kind of pullback, right? Then you rally up, pull back, then you rally up, pull back, then you rally up. Right? But in the long term, I think the dollar index is going higher, right? So let's break down into this is daily time frame, right? So in our smart money trading series, I think some of them are in the can access to those series. You know that we do not have to look at the higher time frame if you are intraday trader, because if you are intraday trader, it doesn't make sense for us to look at weekly or monthly time frame, right? It's better we just look at the daily time frame and look for intraday trade. Okay, so there's no point for us to look at let me show you. And sorry, by the way, can you see my chart? I just talk away and without asking you guys. Can you see my chart?
Yes.
Okay, good. Now you can see that this is a daily time frame. There's no point for us to look at this high or this low or this one or this one or this one, right? On all this. There's no point. Why? If you are an intraday trader, right? Because when you are intraday trader, now imagine intraday, you are in and out of the market within the same day. In other words, you are trading on the daily candlestick, right? The price just go up and down. You are in and out within this candlestick. So something like this, that today you have a candlestick like this. You are trading within this candlestick. So what's the point of looking at this high, this low? There's no point at all, right? Unless you are swing trader. Then that's a different story. Okay, so as I mentioned many times to those people who are in the trading room, right? You need to define what kind of trader are you. Are you an intraday trader? Are you a swing trader? Or are you an intra-week trader? Okay, different trader will have to look at a different time frame, different amount of data point, right? So if we are intraday, right now nowadays because of the pandemic, right nowadays I really convert myself more of an intraday rather than anything because just simply nothing to do, right? So now, based on intraday, I can see that we are in a bullish trend, right? And we have made a high. You can see that we have made a higher high here. And now, this looks like going to have a lower high. We do not know yet because this is not yet closed, right? This candle can move up higher and end up, it can close up here. Right, and we have a high, a high, a higher high. So we do not know yet this is going to be a lower high or lower low. Okay, so we can say that, well, it is a bullish. Now, if it's bullish, I want to look for long. I think the target is going to be this target first, at least 94.50. Okay, and this is the range that we have. We have the structure range. Okay. So I think in the near term, I think we might see the price go for this target. Okay, we have this gap that need to be filled, and we can already we see that the price already filled 50% of this gap. Okay, so will it continue to go higher? No, we do not know unless we go to the lower time frame. All right, so let's go to the lower time frame. We go to the H4. Okay, we in the H4 time frame, very interesting. Last Friday we saw the euro drop like the rock, right? And dollar have went up. The dollar have took out this high. It took out this high, right? You can see that stop hunting. Stop hunting. Okay, and now it looks like it's want to pull back, right? Because why? Because the institution trader, they move low to stop loss all these people out, to stop out these people, and then they move the price up. So they stop out all these people. So now when I say stop out all these people, meaning what? These people who actually put a sell order there, they have a stop loss above this swing high. This stop loss is actually what? A buy order. All right. They put a swing high here. Stop loss is actually buy order. Okay, all the retail trader, all the hedge fund, their stop loss is a buy order. So institution trader, smart money trader push the price up, trigger the stop loss, right? And all this buy order meet the sell order, right? This is exactly what institution wants. So they meet this sell order, and now what happened? The price is going to push down. Okay, because why? Because they are selling. Smart money are selling. They need buy order to meet up, right? So now I believe that in the short term, we are going to see the dollar index start moving lower to fill this gap, ERC gap, right? And so if dollar index is moving lower in the short term, we can expect the euro dollar, pound dollar to move higher. Okay, so this is short term, yeah, short term trading. And now what we do is we can go to the, I'll do an analysis on the euro dollar. Okay, and then you guys can pick your currency pair. Okay, let me erase everything. Start from weekly, daily time frame. Now we can see that daily we are in a very bullish. We are in a bullish trend, right? Lower high, lower high, lower high, lower high. We are sorry, we are not bullish. We are bearish.
Bearish,
okay,
very bearish.
Yeah, we are bearish. Yeah, I'm sorry. And where's the price right now? The price is here. So if I put a horizontal line on this low, okay, where do I see? This is the low. Okay, this is the low. We have a little bit of break of structure here. Another break here. Price come back down. We have two break of structure. Can you see that? Two break of structure. But to the left, I don't see any significant demand. Right? I don't see this because the current price is here. So it tells me that there's a potential for the price to push even lower. All right, so let's go to weekly time frame. See, in the weekly time frame, we are actually in this ERC. We are in this ERC. Right? We know that ERC body is empty. So it looks like this is going to be filled up, right? So I don't see there's a strong demand on the left, right, to support this level. So it means that there's a chance that we are going to see this more further down move. Okay, further down move maybe to this breaker and this what I call it demand. Okay, these are the two areas. I think the price is likely to come to this area before we see the price start moving higher. Okay, so now with that bias, I'm bearish euro dollar. Even it had dropped so much, but I still bearish. Okay, I'm still bearish. And in the daily time frame, you can see that we actually saw the price drop. Yeah, it dropped. Now, for those of you who are in the trading room, you can see this is a zone that I marked the other day, right? It has hold for many times, 3 times, 4th time, boom, down. All right. So it's holding the price. And now I think this is holding the price right now. Okay, temporarily. For short term, we might see a price go up and then go down again. Right? Why? Because there is really no support here. Okay, I don't see any support here. Right? The further support is right below here. Okay, so there's potential for price to go even lower. So now we go down the 4-hour time frame. Okay, in the 4-hour time frame, we see the price start to go up. But the thing, I'm not sure you see this. This low is lower than this low. Okay. So now why I mentioned that? Because below this low, we have a lot of what? Sell order. We call that sell side liquidity. Okay. Because the trader who buy here, they put the stop loss below the swing low. So the stop loss is actually a sell order, right? Stop loss is a sell order. We call this sell side liquidity in our smart money trading, right? So now you pay attention to this. The price did not push through below this low to trigger the sell stop, to sell order, right? So why the price start moving higher? Well, I can see the price start to move higher because of this stop hunting this low, right? You can see if you put the horizontal line there, you put this horizontal line on this low. Can you see that? Exactly, right? So the reason why the price move up higher is because of the liquidity over here. Because of the liquidity below this swing low, not this swing low. This different, yeah? This swing low. This swing low, we have not come here yet, right? So we see the price move lower, stop hunting this low. And that's the reason we see the price start moving higher. Why? Because the smart money tap into this sell side liquidity, which is a sell order, right? Sell order, the stop loss of these people are sell order. So that means the smart money are buying. And that's the reason why this sell order is tap into this buy order and we see this move up higher. And the reason why I bring this up is because now the fact that the smart money did not make a low lower than this low to stop hunting this, it means that the amount of sell side liquidity below this low is not as many, not a lot, right? So let's say if I give a figure, let's say we have 100 million sell order below this low. Okay, but here you can see we have a double bottom. We have here, right? Maybe the stop loss below these two double bottom is maybe, let's say 500 million, something like that. Just a figure to impress you, yeah. So it means that this move up is going to be temporary because of the reason why this move up, because of this sell side liquidity are being tapped. Sell side liquidity is a buy order, sorry, it's a sell order, stop loss, right? So these people sell order fit into this buy order, we see a pullback, right? We are going to see the price move back down lower to grab this liquidity, right? So that's what I think the euro is likely to do. Okay, so the question right now is, where can we expect a drop, right? We have a few things to look at. First of all, we have this gap that need to be filled, right? This huge gap need to be filled. We have a gap here need to be filled, right? This is gap. We know that Forex market is an efficient market. So being an efficient market, we should not see a lot of gaps, and all these gaps should be filled at least 50% of the range, right? We don't expect 100% fill, but at least 50% of the range, we should expect this to fill, right? So I'm expecting the price to move to this area, fill up 50% of this range, right? Look at this area, right? Those of you in the trading room, you know what I'm looking right now. Yeah? Our winning pattern is already appeared there. Pay attention to this, right? Look for a short here. Okay, look for a short here, and then take your trade down. Now, of course, you might say you want to take off some profit here. It's okay, right? But I think the next target for price to move lower is these two. They want to stop out this. The reason why the smart money they move down to stop out this, because all the stop loss locate below these this multiple swing low, they are billions or millions. They're much more than this single swing low, right? So the only reason we can see the price start moving higher and higher is when we have a lot of what? Sell order, which locate at below the swing low to fit the buy order. And that's where you're going to push the price up, right? So this little swing low, minor swing low, is only, I think, able to push the price up to a certain level, and we are going to roll over. Okay, so I think that we want to look opportunity to sell the euro dollar. Okay, any questions? That's based on the 4-hourly time frame. Okay, now if we go to the 1-hour time frame, again the same thing, not much of different, right? You can see that we have a lot of gaps there that need to be filled. Okay, we have this winning pattern there. Pay attention to this. All right, it's there. I think we're going to have opportunity there, right? Now, once the price go to this level, do not just go and put a sell limit there. Very, very important, which I mentioned many times, right? This is the point of interest. Once the price enters the point of interest, we are not going to just put a sell limit there. You must go in, wait for your entry setup. All right. Once your entry setup, then your lower time frame is in line with the higher time frame downtrend. Then you can sell. Okay. We try not to do anything when the higher time frame is bearish, but the lower time frame is bullish. We don't want to trade this, right? We want to follow the higher time frame trend, buyers, which is bearish. So we are looking to sell. So we only want to sell when the lower time frame, right, is also downtrend. Okay, so that is our setup, entry setup. Any questions on the euro dollar? Anyone have any question? Well, anyone? No? Also quiet one.
How about we will also put include the Wyckoff principle, Benny?
Come again, Eddie.
How about also apply the Wyckoff principles on this?
Sure.
trade?
Wyckoff is another method you can use to time your entry, right? You can use that as well. So you have a few weapons, a few tools for you to use to time your entry. You can use Wyckoff as well, right? But remember, not every time you will see Wyckoff, right? Sometimes we see Wyckoff, sometimes we don't see. Example, we might see the price go up in the lower time frame. We have a selling climax, buying climax, and then we have upthrust, and then we have a sign of weakness, and then after that we see the strength coming up again. We have a U-tail, right, and down again. Then we have last point of supply, and then it break, right? So this is Wyckoff distribution. It can happen this way in a lower time frame, maybe let's say 5-minute time frame or 3-minute time frame. It's possible it might have this. So you can watch out for this. All right, you can watch out for this. But not every time the market will give us a Wyckoff. You understand what I mean? We must able to trade whether you have Wyckoff or no Wyckoff. If you have Wyckoff, we trade Wyckoff entry. If we don't have Wyckoff entry, we use another type of entry setup. Okay, Eddie?
Okay, noted, Benny. Thank you.
Yeah, and for this Wyckoff, remember, you will not able to see Wyckoff in the 1-hour time frame, because by the time you see Wyckoff, it's already too late, right? So if you want to look for Wyckoff to enter the trade, you need to go down to a lower time frame, maybe say 10 minutes time frame or even 5 minutes time frame to see the pattern which I just draw. Right, so do not stay on the one hour, because unlikely you're going to see the Wyckoff in the 1-hour time frame. Or even you see, by the time you see the Wyckoff pattern play out, you realize the price is already right at the bottom. It's too late already, right? So if you want to use a Wyckoff to time your entry, go down to the lower time frame. Okay. In fact, it is not that difficult, right? Because to use a setup entry. Now, remember, when the price, it's very simple. Now, if that example, this is our point of interest. And when we see the price start moving lower, up, right? This in the lower time frame is bullish. But we are looking to sell according to higher time frame because we have a break of structure, right? We expect price to go even lower. So higher time frame is bearish, but lower time frame is bullish, right? So what we can do is it is not difficult. We don't even have to use white call because not everybody are trained on how to use white call, right? So what you can do is wait for this. In the lower time frame, you're going to see a higher high, higher low, higher high, higher low, higher high, higher low, something like that, right? Now, how can we know this uptrend become a no more uptrend? We need to see a change of market behavior. Now, this is a change of market behavior, right? We can see we have a longest selling wave compared to this selling wave. Compared to this is a longer selling wave. So this is a change of behavior. Once we have this change of behavior, right, we can wait for price to pull back. Okay, and between this area, this leg to this low, this will be your range. This will be your range to take a shot. Now, within this range, right, you might have a trap order here, or you might have a gap here, gap in the lower time frame. In the lower time frame, you might have a gap here. So now you have two reasons for the price to pull towards them. One is a trap order, one is a gap. So you know that your point of interest right now is limit to here, to this one. Okay. And you can wait for price go in and then take a short there. Okay, so that's how you do, right? An entry setup. So you don't even need to wait for white call. You are not, for those of you who don't really understand white call, you don't have to. Yeah, all you have to do is wait for this market structure to change, where price start to make a how you call it? Price make a high, lower high, a low, lower low. Like you can see that we have a move up. Now the price start to move lower. Right now, remember, price is fractal, right? What happened in the lower time frame is also happened in the higher time frame, right? So when we see the lower time frame start to shift, it means that higher time frame also eventually will start to shift, right? So we can work off from the lower time frame for such a shift, and then before you pull the trigger. Now, if we see the price come to this point of interest and it continue to do this, clearly market want to go higher, then there's no trade. There's no trade. Right? There's no trade at all. Okay, so that is what we call the market structure. Any question? Now, this euro dollar, remember in a trading room last Friday, I said, well, when the price was dropping like this, I said, I'm looking to long, right? When the price was like this, I said, I'm looking to long here at this demand. Now, when I say I'm looking to long at this demand, do I put the buy limit there? No, I don't do that, right? I say that when I wait for price to arrive this point of interest, that is the first thing I need to do. Now, once the price arrive the point of interest, what do I do next? I go down to the lower time frame, say 5 minutes time frame, or 10 minutes time frame, or 50 minutes time frame, right? So in the lower time frame, what do I want to see? Well, I want to see the lower time frame bearish movement change to bullish movement, right? Then I go into to take a long. But what did we see on last Friday? Did we see this thing happen? No, we don't see, right? Take a look at this. 1 hour. See? Look at this rig, this candle all the way down. There is no turning back at all, no chance at all, right? So not to mention we are waiting for setup to buy. No, now then we see break of structure. But last Friday, no. So that means what? We are looking for long here. There's no trade, right? So that is the beauty of waiting for confirmation rather than just, oh, this is my demand. I'm going to put on my buy limit and my stop loss. Now, if you do that, right, and then you get stop out more often than you think. All right. So yeah, so that's why I prefer confirmation entry. Okay, define your point of interest in the higher time frame. Wait for price to enter the higher time frame point of interest. Go to a lower time frame. Wait for the entry setup. Very simple step, right? Okay. Any other questions?
Binny, just to clarify, I was looking at the Euro USD H4 time frame.
All right.
Is it not the red candle before it before the ERC? Is it not a valid breaker?
Which one?
That an August 28 candle.
August 28.
Yeah. That's
This
sorry,
one.
October. No, yeah. That one.
This.
Yep. Is it a valid breaker? Bearish breaker.
Yes. But the thing, why this doesn't work? This doesn't hold, right? I don't know. Last Friday, what news is that caused this movement down? Anybody? Anybody? Anyone know? Last Friday. Hello. Why this breaker doesn't work? Look at the higher time frame. What's the higher time frame doing? Huh? Okay. So this higher time frame, right, is bearish. So now you are trying to long here. Of course, it's counter trend trade. Can we do that? Yes, we can. Right, but we are counter trend trade. Remember one thing, right? Now the other thing, look at this triple top here. This is specially engineered by the smart money to attract the stop loss above. Okay. And when we see a price drop lower, stop hunting on the low, right? And then it went back up, stop hunting on here. Now, if we look to the left, we have a supply over here. And we are in a bearish trend. This is a way to smart money to move the price up, to induce more buyer to come in to buy, because every trader think that this is a breakout trade, right? So they jump in to buy. So when after they jump in to buy, they put their stop loss below here. Plenty of them put their stop loss here because it's a triple bottom. So a lot of people think that this is a very strong support. So their stop loss is below here, right? And this breakout above this high, a lot of people think it's a breakout trade. So a lot of people put a buy order there, right? But this is specially engineered, right, to push the price up, to get a lot of buyer comes in so that they can put their stop loss here, all right? And at the same time, you can see that the smart money need to grab all this liquidity, right? Because they want to break this breaker, right? Because if you have not have enough liquidity, they will not able to move this kind of movement. This kind of movement need a lot of liquidity, right? And this is exactly what they need, the triple top, where triple top, you can see that there's never been visible before, right? So plenty of millions and millions of stop loss above. So when the price move up here, it grab all the liquidity and then it drop down, right? It take out this breaker, take out everything, okay, and go with the trend.
Okay, thank you.
Yeah. Okay, any other questions? No question? Or any other currency that you want to see? Like I say, I apologize. I did not prepare for these sessions, right? So I like you to tell me what currency you are watching and we look at it together. Monday, usually I don't trade many anyway. I only start to trade on Tuesday. Hello, anyone? Ravi, what, first time I see you here, Ravi. Ravi. Okay, dollar CAD. Let's take a look at dollar CAD. Okay. You are looking to sell. What kind of trader are you? Intraday, swing? What kind of trader are you? Huh? Can you hear me? Because you see, I cannot make any analysis if I do not know what kind of trader you are. Because I might be looking at the intraday trade, but you might be looking at the swing trade. So what I feedback to you might be totally different, right? So I need to know what kind of trader are you?
Intraday, Sir Benny.
Okay, intraday. Now intraday, you are looking to sell, right?
Yes.
Okay. Now, I see that the price has moved from this low to this high. We have a high, high, high. And now we have a shift of market sentiment.
Yes.
We have made a lower high. All right. And we break this structure.
Yes.
So now we are bearish.
Yes.
Okay. We are bearish. So now the thing is we have moved lower. We have stopped hunting this low. We have stopped hunting this low. This double bottom here.
Yeah.
Okay, we have stopped hunting this as well. And this not yet, right? So
Not
we
yet.
have stopped hunting a lot. We have stopped hunting all this. So all these stop loss below the swing low are what? Are sell order.
Yes.
So we see that smart money have been taking out all these sell order. Okay. So in other words, I can see we have a lot of break of structure, break of low, break of the low, break of the low. Okay. Now the thing is, basically what we see this price make a low, we take out the low.
Yes.
Okay. Price make a low, we take out the low. Okay, let me ask you, when the price make a high and it take out this low, it take out the low, the liquidity. Okay, what is the next likely movement? Up or down?
Up.
Up.
Exactly, right? We have been taking out all this sell side liquidity constantly. Okay, and we have not seen a pullback yet. We have not seen a pullback yet. Right now, if we magnify this area, we can see that we have a lot of gaps that need to be filled. Okay, over here drop, we don't have. The price drop, we have fill up. Price make a low, it fill up. Price drop, it fill up. Price drop, this has not yet fill up. And then price continue to drop, gap, it fill up. So this has not fill up, right? Because price is movement is, they are constantly moving up and down. Example, we have seen the price move up, it make a swing high. Now above swing high is stop loss. So what the smart money do is it move higher above this stop loss to grab stop hunting, to grab the liquidity. Then after that, what do they do? The smart money will have to rebalance the price action here, because after the surge higher, usually you left behind a lot of gaps, right? We call it imbalance. So after the price took out this swing high, you need to do rebalance. Then you go out again, take out the swing high, then you need to come back rebalance. Take out the swing high, you need to come back rebalance again. And that's why we see the price move in a wave, up and down, up and down, up and down, and it create a higher high, higher low, and we say that it is bullish in the uptrend, right? And likewise For bearish, it's the same thing, right? Market movement is always two movement. They are looking for stop hunting on the we call this, the market is always stop hunting the outside liquidity, the external liquidity, and then after that we do the rebalancing. Because example, look at this green candle here. The market took out this high, move higher, right? And what happened to the price? Rebalance. Why the price need to come back to do the rebalance? Look at the gap that they left behind, right? A lot of gaps. So the price pull back to rebalance. Price move higher, price pull back to rebalance, right? So what we see, why? Because there's a lot of gap here, need to be rebalanced. Okay, so the price come back, price move up, price come back, price move up, price come back. But now, if we look on this bearish mood here, have we seen any pullback yet? We haven't seen yet. We have not seen it yet. But over here, if you pay attention, already there are some pullback. Price drop, price rebalance. Price drop, price rebalance. In the lower time frame, you can see already. You can see the tail. You see this price from here to here, it dropped. The next candle, it move up, rebalance. Then price move lower to this low, price move up, rebalance. Price move lower to this low, price move up, rebalance. Price move low to here, have we rebalanced? Not yet. This one not yet, right? So it means that price is going to come here. Okay, price is going to come to this area, 1.2500 to 25550. This is the area the price will come. So this is my target. Now, once I have my target, now I can do two things. I can say that, well, it is in a bearish trend, so I only want to sell and go along with the main trend. Not well, you can do. So if that's the case, where are you going to sell? You're going to wait for price to come to your POI, which is here. Now, from current level to this area, to this current price, how many pips? We see there are, from current price to this point of interest, at least 100 and more than 100 pips, at least, right?
Yes.
So either you can just do nothing, wait for price to come out, and you see the price go up with 150 pips and do nothing, or we can look for a long opportunity here and take our profit there before the price move lower. All right. So it all depends on you need to understand where are you in this price movement, right? If you long here, you know that you are counter trade. You must know where you take the profit, because your tail profit is your point of interest. On the other hand, another trader might say, well, I want to make things simple. I just define my point of interest. I just wait for price to come here and then I short. But to another trader who are more aggressive, he say, well, why not I from the current price to this point of interest is 100 pips. I can pick up 50 pips. This is very good. Why not I do that, right? So this person, he might say, okay, let's look for a long trade. So you go down to a lower time frame, right? You go down to 4-hourly time frame. So in the 4-hourly time frame, what do we see? Right? We see the price was down.
Yes.
What else you see?
Doesn't create a higher high in the H4.
You see the price down,
yeah,
down, down. Now this is white call, Eddie, right? See this? Okay.
Yeah, I saw also. Looks like there's a spring.
Yes.
Looks like there's a spring.
Yes. Yeah, correct, right? So this is white call. If you study white call, this is white call, right? Now, if you don't study white call, it doesn't matter. You use this. We have a low, we have a high, we have a lower low, we have a high, we have even a lower low. Now, this is down. So now after down, you can see what happened, right? The next movement, we see the price start to move high, 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 up. We see the break of structure. From a bearish trend, we have a break of structure. Now we have this break of structure, break of market structure. We have a high here. We have a low here. Okay, and see what happened to the price? Price move lower to take out all these stop loss. right? Why? Because institution trader want to move the price higher. So what do? They start to take out all the early buyer, because there are a lot of trader who actually go long, because they
Yes.
also saw this white cloth. They start to go long and put their stop loss below here. Well, the smart money say, well, I'm not going to let you ride on my back. So what did they do? They push the price lower to stop everybody out. And
Yes.
now what happened? He take his own sweet time, right? And see any more buyer want to come in. Okay. So now we see the price is going through a phase of accumulations. Okay, accumulation. Now the safer bet, it is very, very difficult. It is very difficult. I say once again, it is very difficult to trade when the price is in the range, because when the price is in the range, we are going to experience or see a lot of stop hunting, manipulation, and stop hunting, right? Unless you are very good. Otherwise, you will think that, well, I think that after this stop hunting, the price is going up. So what you do is, after this stop hunting, you start to what? You start to buy. You see this break of structure, and you say, okay, let's go and buy here. Where's stop loss? You put your stop loss here or your stop loss here. And what happened next is price move higher. You are very happy, right? Price move higher to get to break out this swing high. So a lot of traders who are still waiting, they think, this is a breakout trade. Let's jump in and buy. So everybody going to buy, and then make a down again to take out one more time. Everybody out before it go higher. All right. So be careful of this, right? That's why I say when the price is in a trading range, it is very, very difficult to trade, because we'll see a lot of manipulation and stop hunting. This is a pure manipulation. You can see that if you take a look, if you take a look at this candle, wouldn't you think that this is going to have a breakout? You see, price breakout. Everybody will jump in to buy. Price breakout. Look at this. Breakout this high. Breakout too high. Right? Everybody's scared of moving, missing trade. They will jump in to buy. Stop loss here. A lot of people, they put their stop loss below here. Below here. Below here. A lot of people start to buy because this is a breakout. But what happened? This is actually a manipulations. Right? We have a ranging, accumulations, breakout. This is manipulations, and then we have a distributions. Okay, can you see that? We have this pattern. We have this pattern. This one, I think I need. I have not teach in the Smart Money series yet. We have this. Look at this. I use a different color. We have this sideways, accumulation sideways. We have manipulations. We have distributions, right? AMD. Okay. This is to take out the liquidity. So be careful when the trading is range. So I would rather wait for price to convincingly break out of this trading range. Let it break out, right? And then we start to go for a long trade. When the price is like this, forget about it. Don't do anything. All right. Yes. And of course, you can also say, well, Benny, I'm bearish. Must well, I don't do anything. I just wait for price to come up here. Then I sell. Yes, you can do that. So what you can do is wait for price to go up here. And you go through another phase of white cloth. Like this. Boom, down. And they pull back, down. Right? A white cloth. Okay? Sell here.
Yes.
So you can long here. If you go long at the current price, you want to take profit here. But if you do nothing there, then sell here. Look to sell here. Okay, that's dollar CAD. Okay, is that clear?
Yes. Thank you, Sir Ben.
Yeah. Any other currency or any questions?
Can you take gold, Vinny?
Okay, who is that?
It's Roger.
Roger. Okay. What do you see in gold?
In the short, I'm looking for a setup for the day trading opportunities.
Yeah, what do you see? What do you see?
Yes, sell opportunity. Waiting for
Sell.
the pullback. Yeah.
You are looking to sell.
Yes.
Okay. Anybody have any other opinion on gold? Because I know that quite many people are trading gold. Ada, what do you think? Ada is trading gold. I'd like to hear you guys. What do you think I will go first?
Sell.
Sell. Okay. Then we have another. Roger also sell, is it?
Yes, that's correct, Benny.
Okay. Anybody want to look for long?
Hi, Benny. I'm looking for a
Yeah.
long.
Who is that?
Sri here.
Huh?
Sri.
Three.
Yep.
Three. Where are you?
Okay.
I cannot
Let
see
me
you.
change.
I cannot see you. Next time, put your real name. Like I try to...
It's actually written as SP. My name is actually written as SP.
SP. Okay. SP. Yeah. All right. You're looking for long. Okay. Can you tell me why you're looking for long? I guess three of you are all intraday, right? Am I right?
Yes.
Yes,
Okay.
I'm intraday also.
Okay. Why are you going for long? Anyone? Can you tell me why? And for those two of you who are
Hello?
going to short, why are you going to short? Why? Where you want to sell?
Oh, when I look at the daily, Benny, it has forming a low. The last swing high was which candle is this? The 28 candle was closed below the previous high, which is the 22 candle. So I was
28
thinking,
or what?
yeah, the 28. I was thinking that this lower, higher low. I mean lower high.
This one, this little
Yeah,
doji.
yeah, that one.
Oh,
That
okay.
is lower than the 22 candle. So and then last Friday it was a huge sell off and
How about okay?
took the low
Uh-huh.
past two candles.
Okay. How about Ada? Ada, why are you selling? Ada,
Actually, I'm long, Benny.
you're long.
Yeah.
Okay, let me share with you what I see. Now remember, I'm an intraday trader, so I don't really care about how you call that? I don't care what happened here. Right? I don't care here. I don't care here. I don't care all this. What I care is only here. Okay, because I'm intraday trader. All right, I don't want to miss trade. I don't want to spend time with analyze, and end up no trade. Right? I want to have trade. Okay, so what I see is we see price is in the range over here, and the price drop. We see a price retrace 100% retracement all the way up. Then so now basically what we can see is we are in the range, right? Based on this daily time frame, we are in the range. Now, if you want to break down to a lower time frame, right? Example, 4-hourly time frame. Four-hourly time frame is very ugly. Yeah, let's stay on the daily. Daily is better than 4-hourly. Now we see a price is doing this, is down, lower low, lower high. Sorry, lower high, lower high, lower high. All right. We see the price is moving lower, all this. And now we see the price start moving higher. You respect the low, you take out the high. You make a high, respect, pull back, respect the low, take out the high. So we are bullish. Okay, we are bullish. So why the price is bullish? Well, if I take a look, why the price, we have a break of structure over here. Why the price make a high here? Right? Why the price need to break this high and make a higher high here? Where is the target? Well, when the price is here, I say that the target is this one and the target is this one. And also the price want to fill this gap. Right? So these are the three targets for the price to move higher. Has the price achieved this target? Well, it has. Has the price filled this gap? Partially, right? 50%. Can you see that? Yeah, we don't need to be 100%, but at least 50% it filled. Has the price filled this target yet? This one, not yet.
Not yet.
So two targets have already achieved. All right. And what did the price do right now? Right. We see the price go up, make a high, it make a low, make a higher high, make a higher low, make a higher high, make a higher low. So what do we see this trend is doing? Up. Right. It is up. It is telling us that price want to go higher. So the next immediate target is going to be this high. Price want to move higher to take out this high, followed by this high. Okay, so I'll be looking for long unless the price action tell me otherwise. Okay, but for now I can see that the price still want to go higher. You can see, everybody can see that, right? We have a high, we have a higher 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 high. Now we have a potential lower high. Okay, we need to monitor this area. We have a low, higher low, higher low, higher low. Now we have a, looks like we're going to have a lower low. Not yet the lower low, right? Because this candle not yet closed yet, right? So we are something this is looks like we are changing from this to this.
Yes, yeah.
We are not sure yet. Now, if this change and we have break the structure to the downside, then we will say that, well, the market has already achieved this. Maybe this one the next, because it will leave this high to the next push higher, because why? Because we have a triple top up there. It means that there are billions of stop loss above here. Now, for the price to move up to grab all this, they need more energy. So maybe I think that it's getting this high, feel this gap. It is time for the gold to go down lower to grab the sell side liquidity.
Yes.
Then move higher.
Yeah.
Okay. So how can we tell? Well, we go down to a lower time frame. 1 hour. Look at this. Break of structure.
Yes.
We have a double top. Look at this double top here. Price break. Triple bottom. Look at this ERC.
Yeah.
This is break of structure. Price want to go lower, right?
Yeah.
So what I say just now, based on daily time frame, is correct, right? The triple top right and the top, I don't think the price is going. The price is going down. Now price is pulling back. Now remember, after this price has took out this from this high to this low, it has took out the stop hunting here, right? What is the next likely movement?
Support.
Huh?
Downtrend.
No, downtrend. After the price has took out the sell side liquidity, the stop hunting, what is the next thing the price has to do? Remember, I mentioned just now, the market, the smart money is always doing two things. Stop hunting, look for liquidity, and then after do what?
Rebalance.
Rebalance. Now, look at this. This one need to be rebalanced. Can you see that? Do you see what I mean? This is
Yes,
one-sided. This is one-sided. So the price need to come back to rebalance before go lower. Right?
Yes.
So I think this is a good trade. This is a good trade. Look for a trade at this area because the price already filled this gap. Right? Look for a trade here to sell.
Yes.
Take some profit off this low. And then let me see any other target.
The support at 1720 support.
Huh?
1720.
This is your this is the level you want to take profit. If you short there, take a profit here. All right. Take a profit there. Because look at all this. Look at all this. We have a lot of liquidity below here.
Yes, yeah.
Price will come down here. Okay, but this is a longer term target.
Yeah.
Do you understand? Do you understand what I mean here?
Yes,
right?
Yeah.
So your first target is going to be this one. This low. Then followed by maybe this low. Okay, and some more here. All this. So these are your target. Sell here, take a profit look as it goes down.
Yes.
Okay.
Yes.
Thank you, Benny.
Yeah. Is it according to your plan, Roger?
Yes, that's correct. I was thinking also in the around 1800 there's a to call this trap order. Is it a trap order?
Yeah.
Yeah.
It's a trap order there. But
Yeah, yeah.
anyway, now you can use 1800. But remember, we do not put a sell limit there. We are waiting for price to come here. This is our point of interest. We are waiting for price to come here and show us entry setup before you want to take the trade.
Yes.
All right. So it might overshoot. It's okay. It's okay. Right.
Yep. I was waiting for the change of the market structure in 5 minutes.
And now, if you take a look at it, we have a double top here. Right. It means that liquidity is above here. Okay. So price might want to spike up before come down. Right. So anything can happen. So the first level is we're looking here to sell. It might come up here. So be careful. Right. Price might just down and go up again. Right. To take a shot before it go down. Because of they're up there are a lot of liquidity. But I don't think the price will go so high. I think your price just you will drop off this order block, this
Supply.
the trap order here and down.
It's doing
Okay.
yes, why
I hope this makes sense to you guys.
Yes.
Does it make sense?
Yes.
Yep. Thank you, Benny.
Okay. Okay. Any other currency? Eva, I've opened long position. Okay. Okay, you open long, is it 1782? Yeah. Okay. You're long, right? Where you plan to take profit, Eva? Take profit at 1810, 1813. Wow, you are very greedy. Be careful, yeah. Be careful. Go down to a lower time frame, right? If you see the price start to turn around here, this is a potential turnaround area. Okay. Of course, the next one will be here, which is your target, right? So when the price come here and you see the price start to turn around, a white cop, whatever, break a structure, well, you better take a profit there because it's going down. It might not go all the way up there. All right. Any other questions?
Hi, Benny.
Yeah.
Yeah, I'm actually also looking into gold. But if you're looking into the daily time frame, yeah, the previous supply zone actually is based at 1820 to 1825.
Yeah.
So even as I agree with you, there will be a price drop. But don't you think there will be another retest at least till 1820 or?
Yes, look at it. This is a multiple top. Can you see? So precise.
Exactly.
So there are billions of money to be grabbed.
Right.
Now, if you are trading based on daily time frame, really you can see that we are in the range. All right. We are in, that's why you need to define what kind of trader you are. Now, if you are a daily trader, right, it means that this is in the range. So what it might play out is like this. Just now, remember I say these are the three potential area where price might go, right? So we might see the price come here, right? Then go up, take out this high, okay, and then maybe if we push up, or we might see the price. Let me see. We might see the price drop down, take out all this liquidity, then push higher because they need ammunitions to push up this tree. Right. It can be either way, right?
Yeah.
We do not know which way you want to go. So how can we know which way you want to go? You need to go down to a lower time frame to see the directions.
Perfect.
But both sides, you have liquidity.
Great. But one more standing, which probably I would like to share. Maybe because it's also correlated with dollar yen. So since even the dollar is already in the extreme overbought position. So and now the dollar is actually reaching down as well, dollar yen. Yep. So even it's extreme overbought. So even the immediate range target would be 111. You know.
You see, yeah, we have
So that's the I'm actually
See?
trading both on base on.
So yeah, this is parabolic, right? You can see this is a parabolic movement. Now, in currency, we cannot underestimate how far it can go, right? It can continue to go higher. We do not know, right? We cannot say that this is overbought. The price can be overbought. It can continue to be overbought, right? So we do not want to preempt what's going to happen. We can see that it's a parabolic movement, but do we see any weakness in this price movement based on the weekly time frame?
No.
We see anything there? No.
No.
We see this pair continue remain to be very, very bullish. All right.
Yes.
But of course, after the price take out this swing high, all this stop loss above, okay, if the price can move higher to grab all these stop loss are buy order or sell order. What do you think? The
Yes.
stop loss above this swing high, are they buy order or sell order?
Sell order.
Huh?
Buy order.
Buy order. They are buy order, right? Because a lot of people will put their sell limit there. Stop loss is a buy order. So we say that this is buy side liquidity. All right. So imagine if the smart money push the price higher, right? If they plan to push the price higher, that is because they want to tap into this buy order, buy side liquidity, right? Why they want to tap into this buy side liquidity? Because they have sell order need to be filled. And that's the reason they want to push higher. Now, we have not seen it push higher yet, but if we see the price push higher, it means that they want to tap into this buy side liquidity to fit into this sell side liquidity, and then it take the price down lower. Okay, so we have to see. We have not seen the price push out yet, but if the price can push up again, I think that we might see a pullback and then continue to go higher because it is still remain bullish until we see there's a break of structure to the downside, bearish. But until now, I think we have not seen any weakness yet. Can you see? We see the price move up higher and it continue to remain in the range. It move up higher in the range, right? So why the price need to be in the range? Anyone tell me? Why the price need to create this range? Why? You see the price goes out like this, and now it go into the range. Why?
Stop hunting.
No, they are creating liquidity.
Yeah.
See, they are creating liquidity on both sides.
Yes.
Okay. Now remember, price movement is because of smart money is seeking out liquidity on both sides, right? Two things can happen. They are looking for liquidity on both sides. After they took out the liquidity, they have to do the rebalancing of the price action, imbalance price action. They have to do that. These are the two things they do. They continue to do that, right? So now, if we take a look at this whole thing, have we seen the price rebalance after the price move up higher? No, we have not seen yet. You see this move up? We see the gap there. We see this gap. We see this gap. Okay, we look at this gap here. We see a lot of gaps there. This need to be rebalanced. So in other words, right, we can expect the price push up and then push down to rebalance this because we have already took out a lot of swing high. Look at this. It took out this swing high. 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 It took out this swing high. It took out this swing high. Okay, the price has took out so many swing high, but it has not rebalanced yet. So we think that So right now, how to trade this one is you wait for this thing to happen. Drop, pull back, down. It has to rebalance. Until I
Okay.
see this, until I
Yeah.
see this break of structure, I wouldn't want to sell.
Okay.
Okay?
So literally once it's surpassed 113.6, then we can go for a shot.
No. Even if past what did you say?
113.6.
113.6. Why
Yeah.
113.6?
No, that's the breakout over there. Yeah, or even slightly below.
No, I as long as the price do not break the structure to the downside, we should not
Okay.
sell. That's it, full stop.
Okay.
Because the price action is very bullish. Do you see any bearishness? We don't see, right?
No.
Yes.
Yeah.
That's why we are not going to do any preemptive move. Oh, the price is going down because it has not break this structure. It means that you want to remain higher, and
Right.
we have to respect that
Perfect.
until the price say, okay, I'm going down. Okay, you are going down, then we are going to sell. But until then, we should be long.
Right.
Okay.
Okay. Got it.
Okay. Any other questions? For those of you who are not in a trading room, I would strongly, you might want to consider, because we have a lot of new series, right, which is not included in the previous workshop. Okay, come in to join the trading, because you're not paying for any more course. Just join the trading room only, then you can learn all this new technique, new strategy. Okay, any other questions? Otherwise, what we say here, you might not benefit because you half understand, half do understand, right? Half. No?
Benny, how
Okay,
to join the trading room? Yeah, is it the Slack or
what? You have to go to the Moodle. You know Moodle?
okay? Yeah.
Moodle. Then you click the trading room. You just click the subscribe to the trading room.
Okay.
Yeah. If you are OFT student, you have a promo code. If you are not OFT student, you have to pay the public walk-in rate about $100+. But your OFT,
Okay.
you have a code that reduced by more than 2/3.
Okay. Perfect. Got it. Yeah.
Right. So make sure you get the code from me, lah.
Okay. Great. Sure. Thanks.
Okay. Anything else? Monday usually a bit slow. Yeah. Don't rush into trade. Right. Usually let the market sink in, run in, and on Monday, Tuesday start. Then we start to look for trade, because don't force yourself to trade when you don't see any good opportunity. Okay. I think that's it for me. And if you have any other question, I want to end here.
Right. Thank you, Benny.
Thanks,
Okay,
Benny.
welcome, guys.
Bye.
Thank you.
Thank you, Benny.
Thank you, Benny.
Okay, bye.
Bye. Thanks.
Bye.
Thanks, Benny.